Good morning, good evening, everybody. Welcome. So today I'm going to go over all the trades I took this past week. Let's clear up this gold chart over here. So we're going to go over all the trades we took last week. You can see right here we got the profits right ahead at this point, commission balance, all the trades taken this week. So I'm going to go over all these trades. So first of all, we're going to go over the gold sell I had. The gold sell you can see here at 1692.93 and 1688. This was taken at the same day, different times, right? Same day, different times. So we're going to go over both these trades. So first was taken at 1692.93. Let's take a look at that. 8th March 1692.93. So we're looking at 8th March around right over here. All right, there we go. We got right over here. So when I came to the charts, we saw that there was a support was being formed right over here around 1690. We had a support from 1690, 1689, and then we had a little bit of a retracement. So you can look at the time at the bottom. At time at the bottom, you can see time at the bottom says like 6 a.m. So this is a bit advanced. I'm not going to say advanced, but it requires a little bit more precision when you're looking at the price. So we came down, created support, went up, created resistance, and the resistance was formed after we had this bearish candle close, right, with no wick at the top. So basically, we were in a downtrend, right? We're in a downtrend, made a low, came up, candle closed bullish, next candle closed bearish. When this candle closed bearish, now you have a resistance formed, right? So when you have a resistance formed, now there's a high probability for the next candle to continue driving down to retest this low. So when this candle closed bullish, right? This candle closed bullish, but it closed below resistance. It respected that resistance. So when it respected that resistance, I started to think about that, okay, if we're respecting this resistance, there's a high probability that we may continue moving down. Right, we may continue moving down. There's a very high probability of that. So the execution was done at 1692.93. You can look right over here. This was done at 1692. Come down to where 1692.93 right over here. Stop was kept above this current 15-minute candle, because if we were driving down, then we should be, I mean, the stop was a little bit aggressive, should have had it above the previous 15-minute candle, which is like 15 pips away, not a big deal, but was kept right over here above the 15-minute candle. Really anticipated price to continue down. Looking at it on a 30-minute time frame, we can see much more information here on the 30-minute time frame. Let me get to that right over here. So perfect. So we came to the 30-minute time frame. At that moment, we were about to break the low of the previous bullish candle on 30-minute, which closed like a weak bearish candle, weak bullish candle, which means there's low volume to go up. So this was anticipated, I mean, executed on the 15-minute time frame based on the conditions I mentioned before about the resistance, candle closing below this area. And then I basically anticipated to take profit around down over here at 1690, but ended up closing it around 14 pips at 1691.46, somewhere down over 1691.46, because we were coming down to this rejection area there, so I deemed it okay to just secure positions at that point, and that's when the first trade was closed on gold. And then there was a second trade done on gold, which we're going to talk about right now. It was somewhere over here. So if you look at this right here to the right hand side, you can see it was executed at 1688.72, right? 1688.72. Where is that? So basically we had this one candle close below support with no wick at the bottom. So what do we know about candles with no wicks at the bottom? It means there's no range for the next candle to continue down. So what did I do? We waited. We had to wait, right? Waited for the next candle. Next candle broke the low. It was all okay. Waited. Candle closed bullish. We're like, okay, no problem. Now remember, the bias was bearish, right? Bias was bearish. Next candle came down. It started breaking the low right here. Executed a sell. You can take a look to the right hand side. The sell was executed at 1688.72. This was at 1688.72 right over here. We broke the low. Once we were breaking the low, the stop was not kept above this 30-minute candle. No, this 15-minute candle, because it was too big. It was like a 30-pip stop, right? This stop was kept right in the middle somewhere over here, because once we were breaking the low and moving in pre-New York volume, we anticipated price to continue moving down, which it did continue moving down to like 1685, 1686, but I ended up taking profits around 1687 31, somewhere down over here, around like 15 pips, because we already had like a move down over here coming down. So then pretty much I was okay with that profit on a 10 lot, 15 pips, got it. So we're like, okay, you know what? Perfect. This is done and dusted. And then I had another trade. This was taken around 1687, closer to New York Open. I'm not sure why I took that trade because right after right after I opened that trade, I closed it. So let's take a look at that right over here. Let me just pause it and then play it, and then, but you guys won't notice. So let's take a look here. All right. So the whole idea was that since we created support over here on previously in pre-New York, and when this candle was coming down, it was coming down super hard, right? So I thought it would be a good idea to execute a sell around 1687.86. Somewhere right over here, 1687.86, anticipating price to continue down towards 1685. But as I executed the sell, I realized that this is just a dumbass entry, right? So I'm like, okay, you know what? I'm probably just going to close the trade, and we closed the trade right after that because I realized, I mean, it could very, very retrace or reject the support because, like, I mean, we've already made this low, so who knows what's going to happen. So basically closed that trade right away and decided to call it a day. But then right after we got another opportunity. This was a sell on gold. This was on a lower lot. You can see it right over here. This was taken on a 2 lot trade around 1680.81. Later on in the New York session, I know I was breaking my plan, but already made profits from the morning, so I was willing to risk around $300, $400. So like executed a 2 lot, really really lowered down my lot size, and was really anticipating price to continue breaking down with the volume from London close, right? So executed somewhere around 1680.81, somewhere right over here. So we're going to do a short position 1680.81, somewhere right over here. Stop was kept above this 15-minute candle and really anticipated price to continue breaking down. Held this trade. Once we went in profits, put stops at break even. Now, I was very, very fortunate. I did not get stopped out. That position did not get stopped out at break even. I'm very fortunate. I'm not sure. I mean, the spreads are pretty high on gold. Should have got stopped out, but I guess I didn't. Waited for price to really break below, 1680, 1677, 1678, but we basically held strong around, 1679, so closed that trade around there, around 1679, around here, around like 15 pips somewhat. It was a low risk trade though. I mean, looking on a 30-minute time frame, 1 hour time frame, let's take a look over here. So this is let's go all the way. This is March. Okay, yeah. So we basically anticipated price to break this area low, but it didn't. But we tried. It was a good decision. But so that was also a low risk trade. So we called it a day after that. Now, moving on, the next day, 9th March. 9th March. There was no stream on 9th March, so I didn't take any trade on 9th March. Was pretty busy with some family stuff. And then we came on to 10th March. So remember, right? 8th March, Monday, took sells on gold, 2 trades on gold, and then did a dumbass trade again on gold, which I closed, right over here, closed it, and then took another low risk sell on gold. Low risk, remember, low risk sell on gold. Did around 15 pips on it, was trying some things without my trading time, so I used a lower risk. It is what it is. Tuesday, took the day off, didn't trade at all on Tuesday, came back on Wednesday. On Wednesday, came on guns blazing, and I remember this loss on Wednesday. I remember this loss on Wednesday. So this loss was on pound yen, and if you look at pound yen, I remember why this loss happened. So I'm going to go directly to that right over here. This was what, the 10th of March. Let's go towards 10th of March here. This was right over here at this point. So basically, we were trending bullish. We had the support formed. We had the support. So once we had the support formed, I was under the impression that, okay, well, we've made a support. We made a high, came down, made support. Candles closing bullish on the 15-minute time frame. Looking at the 30-minute time frame right here. So if we quickly go towards the 30-minute time frame, we can see how the 30-minute candle was closing. 30-minute candle also closed bullish. So I said, okay, you know what? It's closing bullish. Over here, bullish as well. Really good idea for price to move up. So I executed a buy. And this buy was executed somewhere right over here. So this is around 7:15 a.m., right? Buy was opened. So we had a long position. Long position was opened exactly at 150.96. 150.96 right over here. Stop was kept below this current previous 15-minute candle and was anticipating price to come up towards this resistance level at 151.080. So basically managed my risk at that point, so closed everything at 159.25. So if we drop down to the 5-minute time frame, I think we can look at it in more detail, right? So perfect. So we look at the 5-minute time frame. Once this 5-minute candle closed bearish, I closed 50%. Next 5-minute candle broke the low. I basically closed everything, and everything just got closed at around 159.25. So that way I was able to, so you can look at the risk, right? Risk was like 7-8 pips. So that way I was able to really minimize my risk at this point. It was a higher lot size, 15 lot size, took the loss, called it a day at that point. I don't think there was anything wrong. I think we had a little bit of a resistance there. So, I mean, it is what it is, right? Sometimes price just does some stuff which you can't really explain. So I called it a day after that. So this was 7 a.m., called it a day. You can look at the time over here, called it a day. And then it came back on the next day on pound yen. And this trade was taken around New York Open. So let's go over here right here. So New York Open. I don't really remember what happened over here. Oh yeah, I know exactly what happened over here. Perfect. So we took 2 trades that day. 11th, right over here. Perfect. So we got right over here. This was New York Open. So if you remember, this was pre-New York. You can look at the time at the bottom, 6:15 a.m. So this was ranging at this point, right? We created a resistance right over here. We had this high that needed to be tested around 151.650. If you look on the 30-minute time frame, you'll see that these were clean candles moving up, right? If you guys remember, we had clean candles moving up. This 30-minute candle basically whipped further down than I anticipated. So let's take a look at the 15-minute time frame here at this point. So when we're looking at the 15-minute time frame, let me just go back here. Perfect. So this is where it is. So right, moving on closer to NY Open, this trade was taken at after New York Open at 151.480. So if I draw this right here, 151.480, as this candle was breaking above to continue up, right? This candle broke the high to continue up, and the entire thing that I was worried about was these wicks here to the left hand side. I wasn't sure whether these wicks are going to cause some problems because we had rejections here before. So I was under the impression that if this candle starts moving bullish, it may look left and see that, okay, my buddies had rejected here before. Am I going to reject here again or not? Like, are we waiting to reject here, or what are we trying to do? So I dropped down to the 5-minute time frame, which kind of like made me close my position. So let's take a look at that on the 5-minute time frame. So basically, this is what happened. Entered the trade right here. Candle came down, closed bearish. This candle kind of went up and down. So basically, I closed this trade at 151.471. When this 5-minute candle didn't really, break up or close strong, so I closed that trade. I think what I could have done differently, I could have closed partial positions like I tell you guys, right? I could have closed partial positions, but I didn't. I held it. No, actually it was this candle right over here, somewhere around here. I don't quite remember, but we did ended up closing this trade earlier on, right? Because was losing confidence, plus we had those rejection wicks to the left hand side, so we're like, okay, you know what, we're just gonna leave it alone as it is. So let me just go back. Where is it? Oops, I think I lost it. Okay, perfect. Right? So close that trade. We're like, okay, it is what it is. Let's move on to the next one. So the next trade, this I clearly remember. Once this candle closed bullish strong, we were kind of like anticipating for the next candles to continue bullish as well. And if you remember, we had a tap at 151.620, and then we rejected that area super strong. So this buy was taken. So I gave my bias a second chance at this point, right? This was executed around 151.525, somewhere down over here, 520. 525. Stops are obviously kept below this range, within this range right over here, because we weren't expecting price to continue down. We were expecting price to continue bullish since we had a strong bullish close at New York Open. So this basically wasn't able to close my positions at 151.680. Was able to close them though at around 151.570 right over here. Around got like 5 pips, 6 pips. It's still a win. It is what it is. I think what I could have done differently, I could have took partial positions again and put stops below this current 15-minute candle, and then eventually you could have had the full target win up over there. But I already had a loss over there, small loss, was a little cautious about that. Right. Also had with this first loss, this was my second loss in a row after yesterday. So we're like, okay, you know what? Got to stay a little disciplined at this point. Now, the next trade which we see here is a sell on gold. This was a 20 pip sell. So let's take a look at that right now over here on gold. All right, so now that we're talking about gold, there were two positions taken. The whole idea was that we had a support here at 1730 on gold. This is a 30-minute time frame. We had a support at 1730. Candle was closing below support, and we were anticipating price to continue dropping down because we had clean range to the left-hand side, and that's why the two positions were taken on gold. You can see, you can take a look right over here. One was open at 1729.69. This was based on the combination of 30-minute, 15-minute, 5-minute, and then the second position was opened at 1729.19, which was closed as soon as it was opened, right? So let's take a look right over here on 15-minute time frame. Let's go down over here. So we can see here there was this one candle, the 830 candle came down, and it kind of like made a low at around 1729, 1728, right down over here, 2860, 50, right? So once this candle was coming down, we're looking at the 5-minute time frame, and when I looked at the 5-minute time frame, we could see that this candle was really dropping down to continue bearish. So the sell was kind of like executed somewhere at 1729.69, somewhere down over here as we were about to break the low. Second sell was executed somewhere at 1729.19 as we broke the low over here. And then subsequently I realized that, okay, like, you know what, maybe that sell is a little too premature. So one sell was closed earlier on around $70. It is what it is. And second one, we left it running all the way down towards 1727.69, somewhere down to 1727.69 as this candle dropped down. Right, so this looks something like this. We had a short position, 1729. What was this again? 1729.69. Somewhere right over here. Stop was kept above the current 5-minute candle, and anticipated price to mirror this whole move to the left hand side. But was pretty okay with around 20 pips. So got that, and then called it a day after that. Got those sells on gold. And then after that, we had a buy on pound yen, and we're going to take a look at that. Now, this second buy on pound yen, this came after like a lot of waiting around, right? Because if you remember, there was a bit of an issue for pound yen to kind of like break above 151,600, right? So if you look at this idea, I think it was somewhere over here. Let's see. It was somewhere over here. Perfect. Yeah, this is where we go. This was somewhere right over here. So this is pound yen here, right? So if you remember on the 12th, this is the 12th, right? On the 11th March. Okay, my bad. On the 11th March, we had a resistance formed right over here around, 151,640. After that resistance was formed, price made multiple attempts to break this area. You see right over here, before London closed, we attempted to break this area, couldn't break it. We came back up again later on after London closed, and then we started to come up again once again, right? So once we started to break above the highs around 151,640, 151,645, I thought to myself, okay, you know what? We haven't really broken above this area. We're moving on to New York close now. Now remember, New York close has some sort of a volume, but not all the time. That is very, very advanced things. I've just been recently started to look at it. So, I kind of like was experimenting with that. So I was like, okay, you know what? We're going to give it a shot. So price was breaking above, this high over here, entered a buy right at 151,634, but the position got slipped and it executed at 151,643. Somewhere up over here it got executed. 151,643. Stops were kept below this 15-minute candle. Let's go over this 15-minute candle. They were kept below this 15-minute candle, like 5 pips away, and was really anticipating price to break above the high and continue on towards 151, 740, 760. Let's take a look at that idea on the 4-hour time frame. If we go over to the 4-hour, what you will see is that the 4-hour candle, the previous one, closed like a weak bearish candle, this means there's no bearish momentum on the 4-hour. Also, we had this candle closing above, we had doji candle. So this one was actually respecting the low, was about to break up with volume. So I was like, okay, well, you know, if it's going to continue moving bullish, I think this is the time to shine. Also, if you look on the 1-hour time frame, this 1-hour candle broke above the high of the previous 1-hour candle, which gave me more confidence that, okay, we should continue moving bullish. Looking at the 30-minute time frame, we were also breaking above this 30-minute candle high as well, and then anticipating volume to continue price above 151,640. So this was the first time after New York Open, price was actually about to break the highs over there as resistance. So that's why the buy was executed at that point for price to continue bullish. Price went up, secured positions. This was the afternoon session, so I was being a little cautious about the volume. Price basically came up towards, 151,717. So basically took profits right over there around 8 pips, whatever there was. 717 was, 6 pips, 7 pips. Call it a day after that. Next, we had sells on gold, right? So we've done all these trades. Next, we had sells on gold. You can see the first sell was taken around, New York Open, 5-lot sell, 8-lot sell, and then we had a sell on pound yen. So let's talk about gold over here for a little bit and see where those sells were basically executed on. All right, so this is where we have gold. And if you remember, we were making a low on gold around 1700, around, after London Open, closer to pre-New York. We made a lows around here at this point. Shortly after that, price went up, closed bullish, candle closed bullish, next candle closed bearish. So when that candle closed bearish, right, we created a resistance, just like we talked about in the first part, the first trade we took, which I talked about, right? So we formed resistance here. Now, when we talk about the candle after that, that candle closed bullish. Resistance is respected. Next candle broke resistance, and the candle after that closed with no wick at the top. So when a candle closes with no wick at the top, this means there's no range for the next candle to continue going up, and that's basically like a 50-50 chance that the next candle is going to go up or not, right? So when this candle also closed, you can see it made the bottom at 1703.12, and if we go down to the 15 minutes, so also take a note of the time, right? Time is 7:30 a.m. So this means this candle closed at 8 a.m. Eastern. So let's take a look at the 15-minute time frame. So you got to watch that part 2 or 3 times to kind of like understand. So when we look at that candle, this was somewhere right over here, right? 1703.801. So this closed at 7:45, and this made the room for the next 8 a.m. candle to open up. So if you look at the live stream, we know that, before the NY Open, we had to move up, and NY Open basically drove price down as it was coming down. So this move up was a fake out, right? Price faked out, and the reason why it faked out was because once this candle started breaking the low of the previous candle, which is at 1703, this is where the sell was executed. 1703.14, the sell was executed at this point, had a short position, and really anticipated price to continue down towards 1701, 1700 even, those areas right over there. Now, when we talk about stop losses, right, now, obviously, having a stop above the 30-minute candle would have been like a 40 pip stop, and that's like a huge stop loss, right? Because, you got a smaller range over here. So what my idea was that, okay, if we have this fake out, right? A fake out means that price started to break up, and then once it started to break back down, it means it tried to continue moving bullish, but for some reason, it couldn't go bullish. So if it can't go bullish, if you look at the fake out section in the unlearn and relearn section in the market fluidity database, you know that whenever a fake out happens and we cannot maintain a bullish momentum, there's a very high probability it's going to go down to the other end of the range, right, which is our 1700 level. So I kept my stops within this range, somewhere around 20 pips, 15 pips, because once we broke this low back in the range, I wasn't expecting price to continue back up. Was really expecting it to continue driving down, and that's where the first trade was taken around 1703.14, and then a second entry was taken at 1702.34. Actually, I took 2 entries. One got executed at where I wanted to get executed. The next got slipped a little bit, right? So we got slipped around, 8 pips, 7 pips. So, but I was lucky that there was a lot of volume. Price really came down to 1701.81, 1701.09. So basically closed my trades right down over there. And as we closed, we saw that we had rejections here to the left hand side. Now, if price had moved below these rejections, we could have moved further down. But since we came down to these rejection areas, I thought maybe this is a good idea to maybe like secure positions. And if we start breaking below these lows, maybe we could look at the 5-minute time frame to see if we can enter again to continue driving price down. But unfortunately, that was not the case, and that did not happen. So yeah, those are two trades right there. The pound sell we had, pound yen sell. This was actually a pretty easy sell, pretty standard move over here. It wasn't much rocket science about this at all. We basically made a low around 5 a.m. Eastern, around 151 300. Price went up, created a resistance right here. 151.540. The next candle closed bearish. Boom, resistance formed. The next candle started breaking below 151.390. That's where the sell was executed around 151. What's this price? 151.404. You can see here to the right hand side. 151.404. Somewhere here. Took a little entry a little bit early because I was getting slipped, so I was like, hey, you gotta be careful. Put my stops above this candle around 11 pips and really anticipated price to continue down towards this support. We came down around 151.290 and basically was price made a low, came up and came down to retest the low. And that was the trade on pound yen. I hope this was educational. If you were confused about some trade, go over this session, go over that trade I took maybe 3 times, 4 times, and really learn about, candle formations, how candles form, how the overall 15-minute, the 5-minute, 15-minute, and a 30-minute forms to create the overall 1-hour structure, create the overall, 4-hour structure, and that's going to help you out a lot. So I would really encourage everyone watching this to go over all the trades you've taken this week. Go over all the trades you've taken this week and try to explain to yourself how you could have done things differently. If you had a loss, how you could have, maybe managed that loss better, done something different. Maybe you ignored something like I ignored in some of my losses there. Some losses that some trades that closed pretty early, before them letting it take profit because that's where my comfort level is. So good luck, everyone. Have a great weekend. And we will see you tomorrow morning. No, actually Monday morning for the New York session live streams. Take care.